Today I'm going to show you the only 3 fundamentals that you need to look at when determining what stock to buy. Forget about reading income statements and going through line by line. You can do that. I mean, that's how Warren Buffett did it. But there's a far easier method. It's looking at these 3 metrics, combining it with some technical analysis. This is straight out of William O'Neill's playbook and Mark Minervini. What we are looking for is the coveted Code 33 stocks. I'll explain that in a minute. And if you're new to my channel, my name's Joe. I do technical analysis videos mostly, though today's is about fundamentals. And like always, this is just for education and entertainment. This is not a recommendation to buy or sell any stocks. So let's get started. The 3 metrics you need to look at are accelerating revenue, also known as sales, 3 or more quarters, preferably 4. Accelerating income, 3 or more quarters, preferably 4. And accelerating gross margin. Income is the amount of money that the company is making per quarter. And the last one is gross margin. Gross margin is a percentage of profit that the company is making on its products. So we want to see an acceleration. The bigger the percentage increases, the better. But you have to factor in the size of the company. It's way easier for a small company to grow than a large company, and some of the large companies offer a dividend to offset some of the slower growth, etc. So let's take a look at 4 stocks and see exactly what we're talking about. This is BELFB. It's kind of a little hidden gem. It's been doing really well this year in the opposite of most stocks, BELFB. So, and I'm looking at MarketSmith here. This is a paid subscription service. It's expensive, but it's wonderful because you get all of these figures at your fingertips. But you don't have to subscribe to MarketSmith. You can find these numbers on your brokerage, Yahoo Finance. You can skim through the quarterly report transcripts, etc. So let's look at the numbers. Here are the previous 4 quarters. So the first line is earnings, how much the company made, and we want to see it grow each quarter, especially the last 3 quarters. So we've got negative 18%, 245%, plus 278, plus 103. So you will notice that the prior quarter, virtually every company declined due to supply issues, chip shortages, transportation bottlenecks. I looked really hard to find a Code 33 stock, and I couldn't find one. So maybe if you find one, put it in the comments. But a Code 33 means that all 3 metrics, revenue, income, and gross margin, have accelerated over the prior 3 quarters. But still, you cannot argue that triple-digit increases in the last 4 quarters is really good. And then we look at sales, plus 18, plus 27, plus 24, plus 23. A little bit spotty. Ideally, we'd want to see an acceleration of all of those numbers. But consistent revenue growth in the mid-20s is pretty good. And let's look at gross margin, the percentage of profit that the company is making on their goods or services, plus 24.5, plus 26.7, plus 24.8, plus 26.6. So pretty stable given the tumultuous nature of the year, but not accelerating the way we'd like. But still, these are good numbers. The other thing you want to see, I guess this is sort of a 4th metric, is you want to see a breakout year. You want to see a big jump in earnings from one year to the other. And we see it here from 15 to 99, 2019 to 20, 99 to 1.65, 21, all of these years are really breakout years, and that's what we want to see. Sure enough, the company's doing really well. It's trying to make a cup here. I'd really like to see it tighten up. Let's draw in. I'd really like to see it tighten up into a handle, break out of the handle, and that would be a great buy point, wouldn't it? then you could set a stop right here. You could set a stop right there. That's BELFB. Let's look at another one. Now, this is Lantheus Holdings. It's a biotech. It is not looking buyable right now. Do not rush out and buy it tomorrow. It is looking heavy and getting pulled back with the general market. But let's look at the fundamentals. We start with the earnings, plus 100%, plus 257, plus 999, plus 709. Slight deceleration, but those are blockbuster numbers, aren't they? Let's look at the sales numbers, plus 15, plus 38, plus 126, plus 121. It dropped off a little bit in the prior quarter, but so did virtually every stock in the market. We can forgive it for that. Triple-digit numbers, the last two, that's really impressive. Let's look at profit margins, plus 42, plus 45, plus 62, plus 62. So we do see a general acceleration of profit margins, and it stayed stable in the last quarter, which is pretty good in this market. And look at this breakout here from 0.49 in 2021 to 3.55. That is a spectacular jump in profit. And sure enough, it's had a great year in 2022. It put in this really nice uptrend. It's really now faltering. And what we're going to hope is for it to put in a new base here. Let's see if it can get support here at 60, or maybe get support at this 200-day moving average, which is this line right here. And then if we see a nice ball-like bounce off of this, well, I'm trying to draw an arrow, off of this 200-day moving average, then we could try it there, put a really tight stop underneath. Otherwise, we need to wait for it to clear all of this supply, maybe start a position over here around 80, and maybe if we get a little cheat or something like that. Let's look at ELF. ELF, this is manufactures cosmetic and skin products. And let's look at the numbers. Earnings, plus 31, plus 9, minus 19, plus 44. Big jump in earnings from the last two quarters, but pretty spotty. Not particularly amazing, but plus 44% improvement. That's pretty good. Let's look at the sales. Plus 27, plus 11, plus 13, plus 26. We see a nice acceleration in the last three quarters. That's exactly what we want to see. Let's look at profit margin. 63, 66, 64, 67. It did go up in profit margins over the last couple quarters, but it's a little spotty. Not ideal, but again, given the nature of the economic conditions, it's pretty darn good. And it's in a nice uptrend here. It made a very small base here, tried to break out, it pulled back into the pattern. That probably is just premature. The weight of the market is pulling it down. It probably needs to just make a longer base, maybe a double bottom or something. But if it comes back and re-challenges 41, if it made a really tight handle here and broke out again above 41, I would definitely give it a try. If it pulls back down to the bottom of this pattern and bounces like a tennis ball, you could try right there as well. Put a stop immediately beneath it. Let's look at one more stock today. I'm slipping into technical analysis even though I'm supposed to be doing fundamentals. I just can't help it. Let's see. LPL Financial Holdings provides brokerage investment advisory services. I know Mark Minervini bought a little bit of this the other day. Let's look at the numbers. Earnings, plus 23, plus 7, plus 10, plus 21. Nice jump in earnings over the last two quarters. A little spotty before that. Sales, plus 38, plus 32, plus 21, plus 7. Sales have definitely dropped off like they have in most companies last quarter. Margins, 21, 20, 22, 24.4. Definitely improving. That's what we want to see. And here we see a double bottom. Okay, here's your double bottom. This is called a cap. You got a cap pattern. And I think the weight of the general market is just holding it down. It recently broke broke out of the cap. It's making another cap. So what do we do here? Well, it's a real conundrum. Again, we just want to see it tighten up. Challenge 250. Ideally, that would be ideal. Buy it at a higher price, but at a better price. Coming out of 250. You could set a stop there. You could set a stop there. Another thing you could do is if it came down to the bottom of this cap at, what is this, 233? Actually, hold on. One sec. Couldn't remember how to turn off my line pin. So 232, yeah. So if it came down near 232 and then bounced, don't set a sell limit or buy limit, but wait for it to bounce. If it bounces, then you could buy it on the way up again, and again set a really tight stops. We got to keep our positions light and tight right now. Now there are two other metrics that you could look at. Let me pull up another stock. One of the stocks, this is 𝐂𝐇𝐀𝐍𝐶, 𝐂𝐇𝐀𝐍𝐶. It's been a great power play this year. Another thing that you can look at is relative strength, the stock's performance versus the other stocks in the market. This is arguably a technical indicator, not a fundamental, but I only like to buy stocks that are 88% or higher relative strength. Then the last thing you want to look at, if you're buying something really speculative that's losing money, or in any stock really, if you are able to, if you have the time and the desire, you can look up how much cash it has in relation to debt. For example, Rivian is burning cash like a madman right now, but they have a ton of cash on hand, and I can't remember the numbers right now. I don't own the stock at the moment anymore, and but anyway, they have a lot of cash, so they probably are not going to need to dilute by doing a secondary offering soon. But if your company is losing money and it doesn't have much cash and it has a lot of debt, then that's a really bad sign that they're going to have to sell more shares, dilute the stock further, which might cause the stock to go down further and create a perpetual money-losing machine. So, yeah, in conclusion, we are looking for stocks with 3/4 of accelerating earnings, 3/4 of accelerating revenue, 3/4 of accelerating gross margin. The bigger the percentage gains, the better. But keep in mind, if it's a big company like Apple, the percentage increases are going to be smaller than if it's a new up-and-coming recent IPO. We also look for big jumps in earnings, called a breakout year. We also look for companies that have a lot of cash and not much debt, like Apple. Those are my thoughts. Let me know your comments in the comments section below. Please consider hitting the notification button. Oh yeah, and I got I activated some Joe's Investment Express coffee cups merchandise and t-shirts. The cup, I guess I'm reasonably satisfied. It's a little smaller than your average coffee cup, which is pretty disappointing. You can fit 1 cup of coffee in there, but definitely not 2. The graphic is cool. It's like $20 or something. That's a lot of money for a coffee cup. And I don't blame you if you don't want to buy one, but you're certainly welcome to if you want to support the channel. If you need a good Christmas present for somebody, maybe for yourself, right? Okay, that's it. Take care, everybody.